Governor, this is an enormous package of measures, one of the biggest in the bank's history. What do you want to achieve by it?
Well, what we want to do is, in a timely fashion and comprehensive fashion, to support the adjustment that this economy is going through. We're going to have a new relationship with Europe, ultimately new relationships with the rest of the world. That naturally brings a period of uncertainty. Some businesses are holding back, maybe some households are holding back on purchases. We want to provide some stimulus to this economy.
You want to get people spending?
Well, we want people to spend and invest in smart ways, and we're providing stimulus, we think, in a smart way, in a way that reaches through the financial system and goes directly to businesses and households. So we don't want this lost rattling around the City of London, so we've designed it very carefully in order to avoid that. We've used all the powers and insights of the Bank of England to do that. So this is about supporting the adjustment at a period when, growth has slowed. There's a risk that it could slow further, and we want to act now to avoid that and to lean against it. And that's why we took the decisions we did today. And I'll just make one point, Sean. These are decisions that really build on things that the bank has been doing over the course of the last several weeks. We expanded the amount of supply of credit to households by about $150 billion by a decision we took around bank capital. And obviously, in the initial aftermath of the vote, we helped the system just get through the night and day.
The question is, you've thrown everything at it that you possibly can. Well, almost everything.
We haven't thrown everything at it.
Well, you could, I suppose, reduce the interest rates to zero. Is that a real possibility? Or even go further, negative?
Well, first thing on negative, not a fan of negative interest rates. What we have said is that we think interest rates could go lower. They could get close to zero, but to a positive number. So people shouldn't have that concern that all of a sudden interest rates are going to go negative. So we could lower it a bit, and that would provide a bit more stimulus if that were appropriate. But we could do other things on all the other elements of the package. We could buy additional assets if necessary. We have a mechanism, doesn't matter the acronym for it, but we have a mechanism that makes sure that these reductions in interest rates, again, go through the banks, get through that system, don't get caught up in the banks, but go to the actual rates paid by mortgagers or new businesses.
Right, so it's encouraging banks, basically, to lend more money to people and businesses to allow them to spend more. Is there a danger that if people are spending more and borrowing more and saving less, which of course they do if interest rates are very low, that in a period of economic uncertainty they might be getting themselves into some kind of trouble further on down the line?
There's two things. One is that the facilities we put in place are not actually designed to encourage greater lending, but to make sure that the decisions that we take here at the Bank of England hit the high street, go directly to borrowers.
Get the banks to do it.
Yeah, and that they don't pocket some of these reductions. That's the point. They don't pocket it. It goes directly to the people watching this program if they're borrowing, if they qualify for loans, if they have a viable business idea. The second thing is that, of course, the problem in times of uncertainty is people hold back. And if more people hold back, more businesses hold back, and more so than they need to, it becomes a self-fulfilling dynamic. That slows the economy more than it needs to, and we can lean against it. And that's why we're acting in a timely way, in a comprehensive way, but a timely way, to lean against that, because this economy has tremendous strengths. It's one of the most flexible economies in the world, huge human capital, strength in adversity, all these advantages that the UK is rightly known for. We can adjust easily to this situation, but it's going to need a bit more stimulus, and that's what we provide.
And what happens if it doesn't work? Where do you go then?
Well, we can, as I say, we can provide additional stimulus if we need to. We're always going to be governed by our remit, by our mandate, which is that bringing inflation back sustainably to that 2% target. So there's limits to what we can do, and we have to balance the ability to reduce unemployment with the need to keep inflation under control.
And you're already worried about unemployment. I mean, your growth forecasts, they're going to plummet. You suggest house prices are going to decline, unemployment is going to rise, inflation may rise. If you are on a low income at the moment, if you're worried about paying your bills, if you're worried you're going to be able to hang on to your job, you have a right to feel really concerned at the moment, don't you?
And that's exactly what we worry about. And if you're worried about those things, you should feel a bit better today.
Really?
Yeah, because the Bank of England has acted. We've acted now. We haven't waited until these effects fully manifest. We haven't waited until a bunch of people have lost their jobs, hundreds of thousands of people have lost their jobs.
I know, and you must feel that personally, surely.
We do feel that responsibility. And so we've looked to provide the stimulus, building on other measures that we've taken, in order to minimize the effect of this adjustment, this necessary adjustment in the economy, on people across the country. So this is about making it a success. And it's our job, Sian, to look forward, to see where the risks and where the opportunities are, not to wait around until it's obvious to everybody, but to act in a way.
And your advice to our viewers who may be relying on their savings, may be worried about their job, may be worried about paying those bills, what would it be today? Well,
my advice is that those risks have been diminished by the actions of the Bank of England.
You're going to have to wait until government policy to really make a difference, isn't it? It's tax and spend. That won't happen until the end of the year. Too late, surely.
Well, I would disagree. We can act very rapidly. We have. Governments will take a little bit more time. They need to be deliberate. After all, it's taxpayers' money that they're spending or raising, and so they need to think through, and they can act. And the Chancellor and I and the Prime Minister, we have been in close contact. We shared understanding of the economic situation and appropriate sequencing. But let me make a core point. What will really matter to wages over time, jobs over time, prosperity in this country, house prices, other issues, all those issues close to people's hearts, is going to be the new relationship with Europe, how it's struck, the new relationships with the rest of the world, how they're developed, and I hate to use the word, but the productivity of this economy. So bigger decisions of government, they will make the difference. All the Bank of England can do, and it's all we should do, is try to cushion the adjustment, try to help with that period of adjustment. And in order to do that, you've got to act fast, you've got to act comprehensively. That's what we've done.
You said this would happen if there was a vote to leave the EU. You were accused of doom-mongering. Were you right? Well,
it's clear that we said as a committee that we felt that if the vote were to leave, that there would be a period where growth was materially lower and inflation somewhat higher. The forecast we've just put out today is that growth is materially lower, inflation somewhat higher. But it's not just the forecast. You see it with businesses, you see it with consumer confidence, you see it with other indicators. That is what's happening. Now, there's no point talking about who's right, who's wrong. The point is, what do you do about it?
But it is Brexit.
Well, it's an adjustment to a new relationship. The question of the longer-term value of those new relationships, those are bigger questions. The net benefit of this decision that we have taken, the people of the United Kingdom have taken to leave the European Union. The net benefit depends on what those relationships are with the rest of Europe and with the rest of the world. All the issues that the government is beginning to address. Again, we're not about totting up scores, who said what in advance. It's more about reacting to the circumstances as they are and making them better, and that's what we're doing.
Will we get a recession?
Our view is that we are going to have growth, small positive growth in the second half of this year and gradually picking up from there. So our central view is no. What we've done today makes it less likely.
Governor, thank you very much.
Thank you, Sian.